Right. So what are you making of what we're saying? Are you optimistic, or is this still fingers crossed for you?
Well, my fingers still remain crossed, essentially because we still do not have clarity, because against the backdrop of the judgment that was just handed out last week to the CEO of Oceanic Bank, there are still the issues of the CBN guidelines and the likely consequences on the banking sector overall. And given that the banking sector is the bellwether sector of the Nigerian the Nigerian equity market, you would expect that these sort of things will continue to affect the market. The rally we've seen in the last few days is actually a result of bargain hunting, in my opinion. We understand a lot of offshore investors have come into the market. We are beginning to see also some degree of domestic participation from institutions in the market. So all in all, fingers still remain crossed. I do not expect this rally to last over the next couple of days.
But you just touched on a very, very important point. It is really the foreigners that are driving this market forward. What do you think it's really going to take to get the locals more involved?
Well, if you look at the fact that prior to the CBN's intervention in the equity market in 2009, the banks were, so much of the funds that were going into the equity market was coming from the banks through margin loans, share purchase loans, and as a result of the CBN cleansing, banks being involved in buying their own equity. So that obviously fueled the bubble we saw pre-2008 crash. And if you look at it critically again, we reiterate this point at the time that perhaps the market is actually trading at where it should be. The last time the market traded at these levels, stable levels, was around 2005. That was during the consolidation of the banking sector, which the market ended the year at 1% up. So what this tells us is that the market is probably trading at where it should be, because if you look at the banking sector, it's trading at a forward PE of about 7.8 times earnings and price to book of about 1.1, 1.2 times. So this is where the value is. However, like I mentioned earlier, domestic participation, which used to come from the banking sector, can no longer happen because of the CBN's directives for banks' participation in the equity market.
One gets the sense that it's really everyone that is not participating locally, even the larger institutional players. But let's move on to where there is value right now. We've seen recently that the non-financial companies have been in the spotlight. They have led the market this year so far. Any particular stocks of interest for you?
Well, interestingly, we actually have been able to identify a few banks.
No, I mean outside the banking sector. Sorry.
We like Dangote Flour, precisely. We like Berger Paints. We do like 7-Up, and of course we like some of these stocks because of the fact that they're trading at single-digit or sub-10 PEs, forward PEs, and the fact that their return on equity is quite healthy, also about 20% going up. However, another good thing is that some of them have a very low free float in the market. For example, Dangote Flour has a free float of about 25%, which means it's probably not likely to be volatile as the market would be, given the fact that much of its issued shares is concentrated in the hands of block investors. So these are some of the stocks we are looking at that we are interested in.
What about Nestle? Because that's obviously the highest priced stock in absolute terms on the market. What are your thoughts on that stock? Because some are saying it's expensive, some say that it simply reflects the potential of the company.
Well, it does, but for us to understand a stock like Nestle, we need to go back to the policy of the owners, i.e. Nestle SA of Switzerland. That company has a couple of hundreds of shares in issue, and hence it's about 200 Naira share price. It's one of the priciest stocks in the Nigerian market, and if you look at the way Nigerian investors have traded historically, they typically don't go for such stocks, except you have your institutions like PFAs who would rely on dividends from such mature companies for their returns. Otherwise, you would not find your average investor, using that term loosely in Nigeria, going for such a pricey stock.
And then maybe in the banking sector now, if you can just quickly touch on which one is clearly on the spotlight for you. We do know that, like you said, there is value in the sector. We
actually have a few. We like Zenith Bank, we like Stanbic IBTC, we like Sterling Bank, and maybe Sky Bank and GTB. We like these stocks because, like I mentioned earlier, some of them are trading at very low PE, forward PEs and price to books. And besides that, as at half year 2010 results, many of them, for example, GTB is doing a return on equity of about 16%. Overall in the banking sector right now, we actually have an average or median PE of about 2-3%. So for these banks, as at half year, we see them reporting 16, 15. In the case of IBTC, 15.7% return on equity. So beyond the fact that they're trading at very low PEs and price to books forward on a forward basis, they also have very high double-digit return on equity compared to their peers in the sector.